Hey listeners, today we had on Tzvi Wiesel, founder and CEO of Baxus. Baxus is an on-chain spirits marketplace that's trying to use DeFi to meet the needs of liquor consumers and distillers in a really interesting way. If you're feeling a little cynical about whether crypto is actually building anything real, this is a good episode for you. It also happens to be my first recording in Blockworks' new in-person recording studio, so that was very fun. We hope you all enjoy. Digital Asset Summit in New York is right around the corner. Some of the biggest names in crypto and several major institutions are going to be there. There's a lot of noise in crypto right now, and I think this conference will be pretty high signal. We're doing a live Lightspeed taping with Solana's co-founder Anatoly and Kyle from early Solana investor Multicoin Capital, so you won't want to miss that either. I hope to see you all there, and you can use the code Lightspeed10 for 10% off tickets at checkout. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today in person in Blockworks HQ by Tzvi, the founder and CEO of Baxus, a wine and spirits marketplace on Solana. Tzvi, thanks for coming back on the show.
Thank you so much for having me.
This is the first in-person episode I've done, and it had to be you because I knew you were going to come through with some quality product here. We have, what do we have? This is bourbon.
Yeah, so we're bourbon. This was the bourbon of the year for 2024.
Wow.
It was Wild Turkey has a limited edition product called Russell's Reserve. So this was the 15-year-old Russell's Reserve. I won't shape your opinion, other than it being whiskey of the year, but I do, whiskey is a personal preference. So
well, in the spirit of podcasting, I'll cheers you to kick it off, and then we'll get into it.
Cheers.
Oh, that's good stuff.
Yeah, they know what they're doing.
You get that Kentucky hug.
Yeah, I love that.
Good stuff. Okay, let's get into it. You've been on the podcast before several months ago, so listeners should just go check that out if they want a deeper introduction into Baxus. But just to kick us off, I'll just ask basically, what is the problem that Baxus solves?
The biggest problem that we're solving right now is the secondary market. So alcohol distribution is a very, very antiquated and broken system, not just in the United States, but on a totally global level. And what that means is, there were, call it 30,000, 40,000 bottles of the Russell's 15. This is the first edition. It's the only one they've ever released. And what makes spirits, whiskey, wine so interesting is that they're as a collectible or as an asset or even something you enjoy, they're deflationary. They only make a finite supply. And so we cracked open that bottle, we drank it, there's one less. And every time we open one of these bottles and we drink it, there's one fewer out there. And so what happens is that the collector who's sitting there in Ohio, who maybe didn't get an allocation or who didn't get one from his liquor store on the drop, is looking for this bottle. And the price that they're willing to pay is, continuously, it goes up, it goes down, it's a market. But legally in the United States, the only way for them to be sold is either at a liquor store or at an auction. And auctions, in my opinion, for a lot of reasons are hyper inefficient. But the time it takes for the product to get onto the auction, for the auction to run, for the seller to get paid out, and for that cycle to actually continue to run, delays, slows down, and really eliminates transparency. It doesn't give you real-time market pricing, and it doesn't give access to people around the world because the auction gets a bottle in, they run the auction, they ship the bottle out. And so what we set out to do with Baxus was, well, what if we took this and we treated it more like even a stock? What if we, and I don't mean in the sense of it's a purely financial asset, but what if, imagine if you were mailing stock certificates to complete your trades. In the 1600s, if you wanted to trade stock from Amsterdam to London, it took about 2 weeks. You had to, complete the trade, send the guy on a boat, send them on a horse. They registered the transaction, went back. Whiskey trades take longer than that now. Like in 21st century, it's longer to trade a bottle of whiskey than it was a stock in 1650. And so we're like, well, what if you had that transparency and the instantaneity of settlement done for something that is so sought after and so broken in, as far as its reach?
Mm-hmm. Yeah, it's good to have you give that overview. I remember when you came on the show and Dan Smith from Researcher interviewed you, and I remember he was in the company Slack after Baxus just restored my faith in crypto. It's actually, a business solving a real problem with crypto rails. And I think there's definitely a direct correlation between, say, the price of Bitcoin and how much people insist that crypto needs to do real things in the world. So we're under 90K right now. So there's interest for this conversation.
I mean, we're seeing it in the market. When meme coins were the hottest thing and you thought that all of your capital was going to do 5x in 2 hours, the crypto people are trading meme coins. Now where it's like, wait a second, like my entire portfolio is gone. You see people rolling it into, hey, if I'm going to buy something, sure, it might not, even just as that, idea of it's going to appreciate as a collectible, it's a limited edition bottle. Yeah, it's not going to 5x in 2 hours, but it's also not going to drop by 80% in 20 minutes. And so that becomes something really interesting as kind of almost whiskey as a store of wealth. It's the true Bitcoin, in my opinion. It's not 21 million bottles of this.
Sure, yeah.
Yeah. That's like something that's like super interesting to me on both the historic level of how like whiskey literally was the first store of wealth in the United States. Like whiskey was the first cryptocurrency.
Yeah.
Like for real, like actually.
Well, because you had all this corn and you had no way to turn it into value unless you could break it down into whiskey.
That was exactly it. And so if you look at actually the first tax that was imposed was the alcohol tax, was the whiskey tax by Alexander Hamilton. Needed a way to fund the national. It's literally so reminiscent of what's going on now.
Yeah.
They needed a way to fund the national bank. And so they decided that whiskey was so they imposed the sin tax. Because sure, you look in New York City and these places, you look in the meme coins, right? And you're like, oh, this is all speculative. This is all, it leads to bad things. But in reality, when you went out to Pennsylvania and Ohio, for them, it was literal currency. It's how they preserved their work. It was their proof of work. It's how they preserved their grain. And then they would send it down river in barrels and they'd use it to trade and actually conduct commerce. And then they're like, actually, we're going to tax your money. That's what it was, to print paper dollars. And they're like, wait, your money is worthless and inflationary, and you're trying to take my actual hard money.
Fascinating. Yeah. I really like that. I really like that idea. So I guess speaking of the spirits market currently, it strikes me that there's like a few, let's say, headwinds for the spirits world. We just finished Dry January, which is an increasing trend. Brian Johnson and his minions are trying to get America to stop drinking. There's maybe macro uncertainty. So if you want to invest in some really expensive liquor, I don't know, maybe people aren't doing that quite as much. So I just want to get from you, what is the state of the liquor market today and how's Baxus positioning relative to that?
Yeah. So first of all, you're spot on as far as like alcohol in general is in a down. Well, I'll put it like this. If you're looking at the chart over 2 years, alcohol's in a downward trend. Purchasing, consumption, brands are all posting, the public companies are posting their earnings and they're down, their forecasts are being revised down. But for bigger, and whiskey trades and alcohol in general is on a different cycle than the rest of the macro economy. And so if you go back, there have historically been whiskey booms and busts, and they follow their own very specific cycle. Because of, and this is the biggest like disconnect, is this is a 15-year-old bourbon. That means that they made it 15 years ago and had to have the foresight to leave it in a barrel for 15 years before they could sell it. So you have this asset of value that is, let's say, appreciating in value, but that you have no access to the capital. They're locked in there for 15 years before they can start to sell it and actually the distilleries realize any return on that investment. Because of that timing and that mistiming and the inability to properly forecast, so distilleries overproduce. So COVID basically is what caused this latest bust in the whiskey world. If you look at the 2018 predictions for CAGR and for everything for the whiskey world, we're actually entirely on the trend that they were predicting. We're actually above the lines of what they were predicting sales would be. But COVID hit 2020, 2021, and people were drinking more. They were at home. And collecting went up. People were buying anything that they could collect and trade. It's my theory as to that's what actually led to NFTs taking off. Was it was something you could do online to trade and collect. That watch prices went through the roof. If you look at watch prices compared to 2-3 years ago, 4 years ago. Wow, time is flying. Watch prices have come down. Everything has come down from the kind of that COVID bump. And so distilleries, and you'll notice this, you could go back in the press and you'll see like announcements for $250 million distillery renovations, and distilleries were popping up left, right, and center. So as soon as whiskey started to pick back up, the collectability, the pricing started to move and premiumize, like brands could start to charge more. Everyone started investing. They're like, I'm going to build a distillery. I'm going to buy a brand. I'm going to start buying barrels. And what ends up happening is there's a correction. There's, it slows down a little bit. We're not growing at the rate that we were during COVID when everyone was drinking. And so you now have an oversupply and under demand. And so that leads to consolidation. The distilleries and the brands that didn't forecast properly, that spent too much money on whiskey, distilleries, like the actual distilleries or distills, they've stopped producing now. They've slowed down because they need storage space. They need actual warehouses to hold all the barrels that are no longer being bottled and sold. So there is definitely a downward trend from the peak, but nowhere like the rumors of alcohol's demise are like greatly exaggerated. And there's a couple of different things. Sure, you have the Brian Johnson movement. I have my own thoughts on him and his whole movement for other reasons.
Yeah.
But it focuses in the same way that you look at certain trends and you're like, wow, these are massive trends. And then you look at it, it's like, I don't know if you remember the articles, like millennials aren't buying houses and millennials aren't buying diamond rings and millennials aren't buying. And then it's like, okay, 3, 4, 5 years go by and millennials age and they, have better and stable income. And it's like, oh, actually millennials are buying all those things in larger numbers than they were before. So I think right now, even with Gen Z and everything, we look at it from the world has changed a lot socially. And I would not be surprised if in a couple of years or so, you start to see a massive pushback. We've already seen this like kind of wild swing of, people not wanting to be like their parents. It happens every generation. You're going to start to see a much more refined palate. People are not going to be chugging $5 vodka, at college parties anymore. People like to say, oh, it's because of, marijuana and psychedelics. It's not, it's just that they're different functions. They serve different functions. And what I think we're starting to see already, because even with all the decrease in like bulk sales, the premium products are actually all growing. So people are drinking better, not more.
Now for a quick word from today's sponsor.
This episode is brought to you by Bonk Bets, the fully permissionless sportsbook built on Solana. Bet with Bonk, Solana, or USDC and get automatic payouts for winners. Every bet that you take earns Bonk Bets points towards cashback, discounts on losses, and more. Lightspeed listeners get 10% back on losses to bet again. Just visit bonkbets.io/Lightspeed or click the link in the show notes. Just a quick disclaimer that exclusions apply and Bonk Bets is not available in all jurisdictions. Thanks to Bonk Bets for making today's episode possible.
And the Baxus platform, you can basically go on there if you're a big collector, take a picture of your bottles, what you have. And I'm assuming these aren't like, your typical liquor shelf. This is like, I'm buying cases of stuff and I have the 2024 bourbon of the year sitting around. And Baxus creates an NFT, it hosts it in its own warehouse, and then you can kind of trade that peer-to-peer. But what are you doing to work with these distilleries that are also part of the process?
Yeah, so, there's part of it is your bottles at home. We have an app. It's called Booze App. You keep track of what you have at home, what you're drinking. That's your own personal preferences. And you go into a liquor store and you want to make sure you're paying the right price. So we have the largest data set of what's going on in stores, in people's private collections, on our own marketplace, on the auctions. So you're actually getting a really good sense of, hey, am I paying a fair price in this store for the product I'm looking for? But on top of that is when they send the bottles to the vault. So we actually do a 360-degree scan of every single bottle. So we provide that. First of all, you see exactly what you're doing because, there's no PSA for alcohol. You're not getting like, oh, it's a level 10, it's a 9 graded or a 10 graded. And if you're a collector, you're like, no, I want the pristine bottle in the pristine condition. But we also do have plenty of stuff that people just send in that's $40, $50, $60 bottle that they're looking to just sell. They've got, like you said, they bought a couple of cases. They got it as a gift. They're not interested in that bottle. So they send it in. They can list it on the marketplace. They can sell it. And that creates that, more liquidity in the market, and it helps them find the bottles they're looking for and also trade the bottles they have. So super cool, but like we have users on our platform who are like in their 70s and their 80s because like all of the complexity of crypto, the NFT side of it, every token of every bottle is an NFT. We're not sitting there saying buy NFTs of whiskey because when people think that, they think it's like you're buying a JPEG. Yeah. It's buy a bottle, buy a barrel, buy what it is you're looking for. So that's the consumer side. On the brand side, we have a bunch of different things that we've been working with them on that really help them. So one of the things I mentioned was on how complex the distribution is in the global sense. So you go into a liquor store and you buy a bottle you like. The brand, you might be a huge fan. You might be the biggest fan of that product in your local area. The brand has no idea who you are because, first of all, that assumes the liquor store, you're not paying them in cash and they're just, they're not keeping a CRM of their clientele. Some of them are, but most of them are not. Most liquor stores don't even have websites, let alone keeping track of who their buyers are. And the brand didn't even sell it directly to the liquor store. It went through a distributor. and sometimes even an importer if it came from overseas. So there's so many people involved that there's no way to actually connect the biggest collector and consumer and fan to the producer itself. And so part of that also that we're solving is just like, hey, in a downturn, in a time like this where, you're not selling as much, the people that you rely on are your biggest fans, are your diehards. How does a brand connect directly to a consumer? How do they get that type of relationship that they're like, hey, you have X number of our bottles or limited edition, we're releasing something new. And rather than it just going to liquor stores and getting flipped on the secondary market, we actually want it to go to people who really care about the end product. And so we've done this with brands now where they're able to do drops directly targeted to the consumers who they want to have those bottles, who they want to be able to redeem them and drink them, rather than it immediately just get flipped by a guy who knows the distributor or the liquor store owner.
Interesting. And I like going along with the metaphor of liquor as crypto kind of. I think what's cool about Baxus is it's a peer-to-peer marketplace as well. And that was sort of the original promise of crypto, was Bitcoin was supposed to be a peer-to-peer digital cash.
Yep.
And this, like, I kind of like companies that try to build in that space, because obviously Bitcoin is not that. Bitcoin is like early whiskey or whatever.
Yep.
But Baxus is building in that peer-to-peer space.
100%. And again, it's more than just the, like I said, the financialization of it. It's also about connecting people with stuff that they love. It's like alcohol is, and the reason why I'm, like I said, super long-term bullish on alcohol is it's like the fabric of modern society, in the sense of we shifted from a hunter-gatherer society to an agrarian society because they discovered that you could turn grain into alcohol. Like the oldest recipe in the world is a recipe for beer. It was literally fermenting grain to turn it into alcohol. It's like literally the social fabric. It's what brings people together. It's what they sit around and talk, like that's what gets them together. And so sure, there's an excessive amount of it. There's parts of it that there's negative connotations for sure. We don't encourage anyone to drink. It's always like, hey, do you want something or do you want to try it? But it's never like, oh, you have to drink this, you have to drink this. But for people who do want it or they do want to try something new, it's like, well, this is the best way to do it. It's the way to try something or even discover what it is that you like. And it's one of those things like you hear about these parties in San Francisco now that people are like, they're terrible because everyone's standing around, talking about what sludge they've bought off of Brian Johnson's website to eat that morning. And it's like, okay, and you're not doing anything. You're not loosening up. You're not, getting a little bit more of that, like, hey, that liquid courage, as they call it. And I think that that's one of the great things. And that's why I do think you're going to see a swing around. You're going to have people realize over time, like, wait a second, like in moderation, they say everything can be a good thing in moderation. And in moderation, there's a massive social benefits to people actually meeting in person, to getting together, to drinking together, having a good time, sharing those experiences.
I think one of the really interesting points you made in that episode with Dan is that people are essentially collateralizing loans with whiskey casks. And that you're sort of using these on-chain DeFi protocols to like do real DeFi, which I think is cool because there's a critique of decentralized finance, which is like it's only decentralized part of the time, and a lot of the time it's not really finance either. So like this is real loans. So I just want to get an update. Like,
yeah, sure.
How is that DeFi wing of Baxus doing?
Yeah, so great. Like it's, and I'll tell you some stuff in a second, but it's growing, and that was really the part because we can tell you actually like where the yield comes from. Like it's not like it comes from, for example, there are liquor stores that have really expensive high-end products that they're able to buy from the wholesale and distributor that they will sell eventually, but they don't have a consumer necessarily walking in every day to buy them off the shelf. But what they do need is operating capital to buy a bunch of Fireball, which their customers are walking in for every day. And these are rare and allocated bottles. So when you get a chance to buy one, like they take them down, but it can be a large chunk of cash. And so they send those bottles to Baxus. And they can use them now to take a DeFi loan, which is going to cost, sure, more than a mortgage on your house because it's not quite that type of, we're not there yet. We'll get there. But way less than a credit card interest to actually fund and run their business. So like they don't mind paying, right now between 12 and 15%, annually. It's also way less than what you pay on, an NFT loan or some of these other things because the asset is less volatile. There's a real end buyer. To run a real business, to actually fund their operations. And that's on the liquor store side. On the consumer side, it's people who are building massive collections and don't want to sell them out while the market is slow or it's down. But they don't want to have to sell off their collection, but they would like capital to remodel their home or go and buy stock or do something else. So it gives them access to that, again, that liquidity. But on the brand side, on the real producer side, the people that are investing the time and the money to make sure that in 15 years we're getting great bourbon. So for them, it enables them to now take their barrels, which are sitting there, like I said, barrels are they have a maturation and a yield curve. As they start off at a certain price, and as they approach maturity, the value of the barrel gets higher, as does the liquid itself, because once it's bottled, it sells for more than the raw cost of the barrel. They can now borrow funds with people who understand where the derivative trading is going on, because they see the bottle sales value, so they know what the value of the liquid inside the barrel is worth, and they can then forecast and say, okay, great, I'm willing to lend you X amount of dollars against this. And it happens in both a B2B sense, but if you go down to Kentucky now, and you might have some experience with this, there are hundreds of millions of dollars of distillery loans that are taking place now on handshakes on golf courses. Mm-hmm. Like really, it's a totally opaque, very, very difficult system to navigate. There are very few banks, there are some, but very few banks that are in it, because they don't understand the underwriting of these assets. They don't know where the exit liquidity is. Like there's no mortgage-backed securities for barrels yet. So they don't have a way to sell it to the Fed after they go and issue them. As opposed to over here, where what we're doing is saying, like, okay, you can now get loans from an institution who's like, okay, we understand what this is, and we can turn this now into an income product for a wealth management fund. Or we can go to our biggest fans and say, hey, these 500 barrels of whiskey that you love, that you're like the biggest supporter of, you can now actually lend against them. And in the event of a default, so first of all, the rates are great relative to the LTV, et cetera. In the event of a default, you just got whiskey that you love, that you know what the real market value is for 50 cents on the dollar, let's say. And so that creates a whole new, which is again, the promise of crypto, is new capital formation, where real customers and consumers are able to invest and fund and actually earn yield on real products that they love.
And to expand on that bit about like just handshake deals, I did want to ask, like, why does it need to be DeFi? Why can't these types of loans be done with just the existing banks and infrastructure we have to do?
Yeah, so this is, some of them they have in the past, but one of the coolest products that we have been testing, and we've got some really big announcements coming out soon, but it's a product internally we're calling Athena, which I know has now become like 15 different crypto protocols. But
it's a yield-bearing stablecoin. That's awesome.
It is not. It could be, but no, it is not. We, ATHYNA, we're very different over there.
Yes, of course.
No, but sticking in the theme of Baxus and Bacchus, like we like our Greek and Roman gods over here.
Yeah, totally.
And the idea of Athena, goddess of wisdom, the idea was that it's actually a product that gives distilleries knowledge and information about their barrels while they're maturing. So what we do is we actually tag each of the barrels. We built this tech using Helium's LoRaWAN network, transmits maturation data, temperature, humidity, barometric pressure back to the distilleries, which they use for their inventory management and for their maturation cycles. But it also verifies the proof of the asset existing. It's like the value of the on-chain side. And the reason why that's so important is one of the tough parts for the DeFi, for traditional financial lending over here, and there's a couple of parts of it, is if you look up, you Google it, you'll see there's been whiskey cask fraud has been rampant.
Yeah.
Because I can sell you a barrel, you're never going to see it sitting in a warehouse that it has to by law sit in a government bonded warehouse, and I go and sell it to 5 other people, and 20 years from now you come to pick up your barrel and, well, 3 other guys came to claim it, or it doesn't exist. And so actually the proof of presence, verifying the asset and having it exist solely on chain, means that now you also have the proof of record, the actual record of who this belongs to. So what it also does that makes it easier is it makes it so that you can borrow against it, but also make it accessible to the market. If I take a loan from an institution, then they have X number of barrels that it's underwritten by. It's a specific, barrel lot, but that means I can't go and start selling out specific barrels from there, like, to consumers or bottling them. Like there's covenants like of what you do with those barrels. Here, you can have a barrel that has a loan. The token has a lien on it. It's frozen. You can list it on a marketplace. I come along and I'm like, I want that barrel of whiskey to bottle for my birthday. I want it, to sit on for 10 years. I want to buy it as a gift for someone. And so the capital immediately flows back to the lender. The excess then goes back to the borrower. So you actually are taking all of the benefits, again, of DeFi, of the ability to still transact, to actually scale up the level of commerce and the liquidity without it having to go through like, great, I have to file 900 pages of paperwork for the loan, and then I have to go and remove them. Here, it's all instantaneous. You get the benefits of, again, that instantaneity and the instant settlement of blockchain and the provability, the traceability, and the history.
So we've talked about a few different business lines here. Mm-hmm. Where have you found the volume to be so far? Is it in the selling to collectors? Is it the DeFi? Where?
Yeah. So the DeFi is it's early. We've been testing it. So that is we work with Loopscale. They're built on Solana. Yeah. We love their team. And because they were some of the first people to tackle like DeFi, but for real things. Like they understood that like, again, having real business in real places with real yield is the future that this is. It's not all about the lending Ponzi's. And so we're working with them now because we now have more assets that are coming on chain to be able to borrow against. They have more people interested in lending against these real assets. Again, as the DeFi farming kind of, these point systems come to an end and people realize, hey, it's not actually as valuable as we thought it was. They're seeing more increased demand. And so for us, the biggest piece that we're just doing now is actually integrating that component into the front end on our site through APIs. And the reason for that is like our philosophy at Baxus has always been crypto people can use it. They know how to transfer their tokens. They know how to like move things around on wallets. But your typical distillery or, 70-year-old guy who has some bottles of bourbon in his basement that he wants to borrow against or sell, I'm not going to get him to spin up a seed phrase and go and install a new wallet and transfer his tokens and lose his funds. So we want it to be, you show up to Baxus, you log in using an email. The wallet's on the back end. All of the kind of crypto stuff can be totally abstracted away from them. And then the same way that I would click on a button to list it for sale, I'll be able to click on a button and borrow the money against it. I can instantly pull it into my bank via, our partners that we use for the credit card and banking processing. So the DeFi part is a big part of our big scale over the next year or two. As I mentioned, we have share with you here, but like we are about to sign a partnership that's going to bring about $1.5 billion worth of whiskey barrels on chain over the next 2 years. A lot of that is going to be seeking capital to secure against, whether it's on the lending side or the direct sales side or funds. We have like 2 institutional funds that are coming on now that are going to be buying distressed assets from these distilleries that are not performing so well and need capital and don't want to borrow. They're willing to sell off excess inventory.
Interesting.
And so the biggest part of our volume right now has been on the transactions, the peer-to-peer, both people, the majority of bottles just keep getting resold. There's still 5 to 10% that gets redeemed, which is what you want. You want people deflating your assets. You want, and not only from the asset thing, I want people drinking great whiskey. Like I love great whiskey, I like some not so great whiskeys also. But ultimately, like, so the majority of our volume has definitely been on the peer-to-peer side. But what I mentioned that's so important about the peer-to-peer side is that ultimately, as this matures as an industry, in order for us to get to a place where you're going to have the BlackRock Whiskey Fund, they're going to need to understand how to underwrite the value of these underlying barrels. And the value of the barrels is a derivative of what the value of the whiskey in the bottle is worth. Mm-hmm. And so you actually need to know on a free market basis, not how much it's being priced for at the distributor level or at the liquor store level, because you go into a liquor store and you'll see bottles that are sitting on the shelf for 10 years because the store has it priced way too high or the brand priced it way too high. It's what is the market really willing to pay for something? And so that ends up flowing upstream into the production side to both give the brands leading indicators, because this is the issue again, is that the whiskey world and the spirits world, and it's why we have a glut right now, we have overproduction. They only have lagging indicators. They have what last quarter's sales were to determine that they should be building a new distillery right now. Well, actually, you need to know what 15 years from now sales are going to be for these types of products if you're building a new distillery right now. And they're never operating that way. They're not getting enough data and they're not analyzing it in the right way to determine, okay, if we had to take a fixed rate and determine, what the value of our dollars are right now relative to the price of bourbon in 15 years, they're not doing that. And that's what ultimately should help shape. And for every other industry, that's what they're working on when they're determining, should we build a new car factory? Should we build a new this? Like, we can pivot. That's what they need to be doing, and it's what they're not doing up until now. So the value for us is that secondary market. It is the peer-to-peer and the consumption market. It's the retail data that we're going to be collecting and stuff through the app that consumers and collectors put into their, into their app, how much they're paying for things, what they're buying, because that becomes so valuable to the brands and the producers. So our goal is to continue to grow the secondary market. Like I said, that's our bread and butter. That's what makes Baxus fun for a user to go on and find a bottle that normally is $75 on a liquor store shelf, listed at $40. It's like, that's an instant buy because I'll redeem it. I'll drink it at home. I'll share it with my friends. But it also, again, flows into the upstream of the vertical, which is, and that's the goal ultimately, is like Baxus we are the peer-to-peer marketplace on the front end. That is what we do. That is how we serve consumers. But our vision and our goal for this goes way, way deeper into the industry. It's actually building out a full-on financial ecosystem within the wine and spirits industry to make it both a consumable, an accessible consumable, but also an institutional asset class.
Now for a quick word from today's sponsor.
This episode is brought to you by Bonk Bets, the fully permissionless sportsbook built on Solana. Bet with Bonk, Solana, or USDC and get automatic payouts for winners. Every bet that you take earns Bonk Bets points towards cashback, discounts on losses, and more. Lightspeed listeners get 10% back on losses to bet again. Just visit bonkbets.io/Lightspeed or click the link in the show notes. Just a quick disclaimer that exclusions apply, and Bonk Bets is not available in all jurisdictions. Thanks to Bonk Bets for making today's episode possible.
I want to ask about, like, you're a Solana founder, we're Twitter mutuals. I see you posting about like the current things on Solana, but you also write or run this very consumer-facing, crypto abstracted business. So I'm just curious, like, how much you're following like the latest SIMD or the degen stuff that's going on, or if that's kind of irrelevant to your business.
Nothing is irrelevant to the business because, like I said, there are things that emerge in crypto and in NFTs and in memes and degeneracy that is a hot thing for 2 seconds and then fades away because the market has not yet figured out how to actually use that in a way that provides value. The internet pre to Amazon, all of a sudden he's like, wait, I can use this thing to get people to pay. And it's why PayPal took off. It's Stripe, like the ease of payments were in an area that people would have otherwise ignored. So I look at these things and I'm like, okay, when I saw NFTs, for example, I'm like, okay, JPEGs is, in my opinion, not a long-term, super valuable actual thing to be using this technology for. But proof of ownership for something specific that we can embed metadata, and in our case, in a full 360 scan, like so you know exactly what you're buying, is the most valuable thing you could have for collectibles. Proof of something that is stored somewhere else becomes incredibly valuable. And so for us, it's actually, I keep on top of all of it because, and sure, it means that I'm, my brain is running both whiskey prices and markets and like what's popular and hot, as well as what's going on with meme coins. But it's because it's like, okay, we might not have a use case for this right now, but there is something we're going to be able to do with this, or something we should avoid that we thought we should be doing that actually adds a tremendous amount of value downstream to a retail facing consumer who doesn't want to think about crypto or touch crypto. So it's actually really important to keep on top of it because one of the biggest advantages of crypto is it's massive acceleration of everything. It's especially on Solana. It's economic development at the speed of light, like constantly happening. And so it's an attention game. So things come and they go and they come and they go. But we're like, okay, wait a second. Let's like slow it down for a second. If we took this and applied this to a product line that we have, would this add value to customers and consumers? Helium, when they first started, now they have Helium Mobile, which is the best thing ever. I use Helium Mobile like every time I have, people try, we're getting them on it. When the network was first starting up, like it wasn't the idea and the vision that they always had was to get to a place where you could provide these decentralized networks and people were running miners, but like there was not a ton of data being transmitted on the network at first. Like there wasn't a need for it, but they understood if we could build out the infrastructure, we can get to the place where we can provide a real service. I think too much of the market is built on what's the new hottest thing. And so they're constantly pivoting to try and just figure out the latest way to extract value.
Yeah.
And we're like, no, how do we provide and build value?
So you mentioned NFTs. I'm just curious, like, are there more recent narratives or like crypto Twitter du jour stuff that you actually saw and you're like, oh, this could provide value?
Yeah. So there is the SPL 404 standard, which was not actually really used. Like the idea that you can take
that takes me back. Yeah.
Right. For us, I view that and I'm like, wait, this is a true. Okay, so it was when they were trying to figure out liquidity for NFTs, and it's when meme coins were taking off. So they're like, what if I could take my Mad Lads NFT and split it into 10,000 Mad tokens, and then all you needed to redeem a Mad Lad NFT was to have accumulated 10,000 Mad tokens. Okay, it gets really tricky when it comes to NFTs because it's like, well, I want that trade and I want that trade, and like, how much is this one worth, and rarity based. So the concept kind of fizzled. Like you don't really see it being used. For us, it's like, wait a second, you could have 50 bottles, limited edition releases, and you want liquidity on them. Now, if you fractionalize them, so there's a company called Rally Road, very Web2, and they do a great job at fractionalizing. They do like this stuff that requires you to like literally file with the SEC for every asset. It's called like what's it called? Like a series LLC. You have to like basically form a company, and each of these is technically going public. You have to do full disclosure documents. It's really complex and it's costly. And so it means that you can only do it for really high value assets. And even then, where is the liquidity and how is it trading? And it only trades between market hours because there's a full on broker dealer. But we look at this and we're like, okay, well, what if you had something like whiskey barrels, like a huge parcel of them, and you wanted to create liquidity and figure out what the underlying value was? And so we are, from the regulatory side, we have to look into it, but we're looking at SPL 404s right now and saying, wait a second, like I could do this at a, what we call a class level. So all of the 2017 old Rip Van Winkle 10-year-old bottles, Pappy stuff, like super, and there's 2,000 of them there are not 2,000 of them in the vault, but there could be 2,000 of them in the vault, and there can be real, effectively fractional liquidity that's trading, that's setting it instead of having to sell the whole bottle at a time. That's something that's super cool that like NFTs just kind of just moved entirely past because it was no longer valuable. But in the same way, again, of like, where are the things that are both non-fungible that could benefit from fungibility? And the answer is, I view that as there's a ton of it. It's basically like you're taking something like a whole company, an asset, and you're turning it into shares in a way that isn't a share because it's not redeemable for one of one that you have to go through the SEC now. It's like, okay, as long as I accumulate 10,000 of these tickets, I can go to like you're at an arcade and I can get that, giant stuffed animal. Any amount of those 10,000 tickets, it's not 10,000 specific tickets, it's any 10,000 tickets can redeem that stuffed animal. Mm-hmm. And so that to me is super exciting. And again, is something that if you talk to anyone, they're like, what are you talking about? Like we moved past that a year ago. We're not interested in that. So yeah, that's one thing that gets me really excited because again, it's how do we create more liquidity in something that is a valuable store of wealth, but that is a traditionally illiquid market.
Yeah. Off the top of my head, I feel like the difficulty there is you have maybe a more crypto native audience that would probably be adopters of Baxus that would want to do like degen stuff and speculate mm-hmm. on these fractionalized liquor bottles. Mm-hmm. But then you have, like 65-year-old dudes in Louisville that are not going to be doing degen stuff. Yeah. So I'm just curious how, like, where do you see demand for that type of thing coming from? And like, would crypto people basically ruin it if they found it by like turning it into more of a heavily farmed process?
Excuse me. So I actually think it's the opposite. So crypto, you get them as your early adopters, which is great. They're willing to test it and break it, and for us to figure out how to make it so that a consumer, crypto people are used to such bad UI and UX. Like they will jump through 900 hoops. Like bridging is a disaster. Like it's awful. And so like they will work through the problems, and because they think there's some, gold at the end of the rainbow over there, that you can figure out how do I improve this product so that by the time I offer it to a wider audience who are non-crypto natives, I can give them a functional, really valuable and easy to use UI and UX. So I actually love that crypto are early beta testers and are willing to test things out by the promise of, hey, I can make some money or I can degen on this. The other great part of it is that it becomes a real market. And so this is why I like the SPL 404. The issue with doing like a single bottle that you fractionalize is that, so this happened on Rally, for example, they fractionalized the collection horizontal of Pappy Van Winkle. So all the different ages that they released one year. And the market cap of those bottles ended up running up to $93,000 because the only place to buy shares in Pappy was now on their platform, and there was only one set. And like, you'll never, like, it will take you 100 years to get your money out of that if you're buying it at $93,000 market cap. Yeah. You just won't. It won't appreciate there. Like, the value of that set is 12 to 15 grand, 20 grand in a bull, 25 grand. Like, it's not getting there. Now, the benefit of the SPL 404, if we're talking real markets, is you see this is MicroStrategy or strategy now. When there's so much demand that the price gets so high, the companies will say, wait a second, we're going to issue more shares, or GameStop, right? There's enough demand for it that we can sell more. And so in this case, if the derivative price of the meme tokens of the Pappy gets too high, well, I'm going to take all those bottles I have at home and I'm going to ship them into Baxus, and I'm going to flood the market with more tokens until we eventually actually find, like, it's not an unlock, like, oh my God, all the VC tokens are in. It's like, hey guys, like, understand that there's thousands more of these bottles out there. So if you're just trying to, pump it up, you run the risk of, like, it gets so high that it becomes now valuable for people to go and buy every single one they see in a liquor store and flood the market with them. You actually find real market pricing by being able to provide as much real-time liquidity. Mm-hmm. And that is the real benefit, because then again, the brands can forecast better of, like, what is the real demand for our product if people know how many are out there. And for the consumers, it's like, great, you know what? There's a built-in floor price. There is a certain price at every single bottle that I will buy it and pop it open. I will open and drink that whiskey because I want to try it. But sure, I'm not dropping 100 grand on that bottle. It's not going to, maybe as a speculation or as an investment, but I'm not opening a $100,000 bottle. I'm not there. I didn't hit it big on the meme coins.
Yeah.
But if that bottle for whatever reason dropped to $1,500, 100% I'm buying up as many of those tokens and I'm redeeming that bottle and I'm popping it open, or I'm redeeming those tokens for that bottle and I'm going and I'm selling it again on the marketplace as a whole thing. Like, there is a real economic engine over here that can be driven through these things. And again, it's like, these are for me, what I love is I get to learn from everyone else who's launching pump tokens and this and these distributed DAOs and all I'm like, okay, this works, this can work, this will be in 2 or 3 years from now, this has to catch up. But it also lets us, like, again, beta test all the crypto users who are willing to jump through hoops so that we can figure out what will stick for a real user.
Mm-hmm. And just talking about this and a lot of the retail peer-to-peer stuff you're doing, I think what crypto does well that it maybe underemphasizes is like just how so many industries have so many intermediaries. And it's like healthcare. Your healthcare should cost X, but then so many people have to get their palms greased along the way that it ends up being really expensive. And admittedly, I think crypto has intermediaries now that can be extractive as well. But in its pure form, crypto allows the distillery to say, okay, these are my core fans. I don't have to get some kind of buyer and then ship it to a liquor store who's then going to sell it at a marked up price to the consumer. It the lack of intermediaries, I think we undersell to people.
Yeah. So part of that, again, is, I always had these fights with people when they were all going, the code is law. And I'm like, no, law is law. There are still legal regulations around the alcohol space about like certain things of going direct to consumer from the distillery to the brand. A lot of those laws are relaxing. People don't know this. The largest lobby in the United States is the alcohol distribution lobby. It's not healthcare. It's not cigarettes and tobacco. It's actually alcohol distribution, because their role with the advent of technology and the internet is the least necessary part of the industry now. Now, it was after they emerged after Prohibition, when it came from how do you get from distilleries to directly to liquor stores so that it's in moderation and regulation by every state. There's still a need for alcohol distributors, smaller brands getting places, but talk to people in the industry. I don't want to get into this is a whole separate other rant I can go on, but they're actually less necessary now. And so they are constantly lobbying the government for regulatory capture to say, no, you can't sell directly to a consumer. You can't ship to this state. You can't ship across these state lines. There are still breakdowns over there. But there are parts of it that can be streamlined. There are parts of it that can be, okay, we have to go to a distributor and go to a liquor store. But it turns out that all of our consumers for this are in California. So we're not going to bother shipping them all out to New York just for them to get bought up at a certain price by, speculators to then go and have them illegally gray market sell it. Or even if they do it legally through Baxus back to the buyers in California, we can optimize the distribution so that it's, so there is less deadweight loss, so that the distilleries who are putting in all of the money and the risk are making more money directly on their product. Like, they know what the market price is, so they know what price to release it at. That kind of goes up downstream. So the distributors can't just add on a 40% markup to the liquor store, who then adds on a 30% markup.
Yes, exactly.
And again, I can't say it out loud who we're doing it with, but we just had a really big meeting with a very large, well-known international spirits brand, and they have a product that for the first time was approved a certain size. Was approved for sale in the United States. There's a regulatory body that literally regulates the size of the containers the alcohol can be sold in. So that's why almost all bottles in the US are 750 ml. Everywhere else in the world, they're 700 ml. The US 3-4 years ago finally approved 700 ml bottles for distribution in the US. So Scotch now, instead of having a separate size for the US and for the rest of the world, imports in the 700s. So this size, it's larger. It's a product that's never been available for. They have a lot of consumers that are excited about it. And so we're working with them and we're developing, and they're basically doing a pre-sale on Baxus for these bottles so that they know how many to send into the US instead of sending in, there's only 30 of them. Instead of sending 25 of these bottles to the US only to discover that their entire market is in Hong Kong, they're actually using the pre-sale mechanism to figure out where these bottles should go in advance using Baxus's infrastructure. So a lot of the buyers are opting in to pay in crypto. They're wealthy collectors. They are collectors of things of value, of scarcity. And they now can use their crypto instead of saying okay, I have to off-ramp my crypto and then I have to go to a bank and then I have to pay them for it and I have to figure out which liquor store. We're helping them streamline their entire industry, which again means less loss for the brands. So if they're able to make more money at lower prices, so that means that this is our motto at Baxus: the seller nets more and the buyer pays less. The seller who puts in the effort, whether it's a collector who doesn't now have to go through, there's a 35 to 40% spread at auctions that they take on every sale. So the seller pays a 10% fee and the buyers pay 25 to 35%. We still have a 10% seller's fee, but we've eliminated the buyer's premium. So if you were going to sell a bottle at $1,000 and the seller was going to get $900 and the buyer was going to pay $1,350, but the seller can price it now at 1,200 and they'll net out 1080 and the buyer only pays 1,200. So everyone is saving money across the entire stack. And when you get to the brand level, that becomes so valuable.
It sounds like what a market maker does almost.
But it's a market maker without us being the market maker. It's the market. The market though is the consumers. It's the standing bid and offer from real, like, sure, you may have a speculator in there, but that's speculation keeps the economy going. If it weren't for the fact that you can speculate on things and invest, like otherwise we'd be like, okay, what can I buy right now? Credit is a good thing. Like it helps grow economies. Sure, somebody took a risk on it and it went down in value. They didn't get out what they wanted from it. Okay, that's their loss for putting the speculation, but the brand now knows where the market is on these products before they release them and make a fool of themselves.
Yeah. YouTube, comment below what you think the brand is. Do you see yourself as part of the RWA narrative, real world assets?
So, okay. No, the reason why this is so is that, in fact, yes, the answer is yes. And the reason for that is, so we were in that quote unquote RWA. We started in 2021. We were RWA before anything else was RWA. First of all, we were trying to put real things on chain when the hottest thing was NFTs and, liquidity coins. And then there was DeFi summer. Like have not pivoted from we are putting real things and making it accessible to real consumers and to real brands and creating real value. I actually don't think that what everyone is calling RWA, like I think that us and people that are doing trading cards and sneakers are actually the only real RWA. And the reason I say that is when most people think about debt and equities and, they're like, oh, RWAs are stocks on chain. When was the last time you held a stock certificate in your hand?
Never.
Right. You trade them on Robinhood or on, whatever your brokerage account is. That is a digital asset already. Like that is digital to me.
Yeah.
Like we view them as real world because, it's TradFi. Call those TradFi assets. They're not RWAs. There's not a real world component to it. Mm-hmm. It is and has always been. And even then we talk about FDV being a meme and stuff. And you have companies trading right now, the Magnificent Seven at 370, PE ratios. Like everything has been memeified.
Yeah.
Like stocks are memeified. Like everything is a narrative now. And so I don't like the fact that we're calling those RWAs because I'm like, again, what's real world? Like, we're saying that those have value. Well, guess what? I think HNT, right? Helium's token. I think that has more value with their economic model than a lot of the stocks that are trading at these crazy earnings multiples.
It can feel to me like it's a little bit of a, what's the term? Like a strategic redefinition where we say, well, stablecoins are the biggest RWAs because it's like a tokenized T-bill. Mm-hmm. But as you said, like the way a lot of people interact with T-bills is through their bank account. So it's already digitized.
Right.
So the bar is almost too low. And I think there aren't maybe enough companies like Baxus. And so we've kind of lowered the bar for what an RWA is. For
sure. And so I know that our lead investor in our seed round was Multicoin, and they actually coined a cool term that I really like that hasn't yet hit the market, but they call it Beckham's. And it's a blockchain-enabled collectible marketplace. Oh, okay. And I do really like that because I think it does establish and distinguish between they have a thesis, and we're obviously we agree that blockchain enables liquidity, price discovery, instantaneity of settlement, and that ability to now use these things 24/7 across the world, where the buyer can be in Australia and the seller can be in Oregon, and the bottle is sitting in a vault somewhere and is being traded, or the trading card, or the game-worn Victor Wembanyama jersey. Like any of those things, I really like that, and I like Beckham, and I like that expression. Again, it takes a while for these things to catch on, but that also for now is still referring to us as the marketplace. I think that the only real RWAs are traded on Beckham's, are traded on these marketplaces, because again, you're right, it's a strategic thing. We're calling them real world, but A, you don't use them in the real world, and B, again, to me, an HNT token that I can use to pay for my cell phone plan is more real world than a stock I'm buying in a company that I think is just a meme because, hey, the narrative has shifted that, defense tech is the hottest thing.
Well, so what does collectible mean there, though? Because I don't know if I'm with HNT, I'm not necessarily collecting
Oh, that's why I don't view HNT. Sorry, I don't view HNT as a Beckham thing. I view it as an RWA more so than a stock.
Yes,
I view that asset as having real world use cases and applications and value, and the value over there being derived from the amount of data being transmitted that's being paid for on Helium Mobile by Verizon offloading their data to the routers that I'm running and stuff like that. More so than I'm not going to name any stock names, but stocks, again, that are trading at these absurd multiples because people have these ideas or these visions of oh, this is what AI is going to do. This is what this is going to do. And I'm like, maybe.
Yeah.
Where's the real world use case over there, especially for companies that it was quantum, like now, like you have all these companies that like jumped on the quantum news, and then you look at them and it's like they have nothing to do with quantum. It's just in the name, like the name of the company is quantum, whatever. And I'm like, we are not not even crypto. Like this, the TradFi is not a serious industry. These are not people that are really paying attention to these things.
The car you have parked out front of the office here is an example of this.
Perfect example.
So maybe the question I'll close with then is as we mentioned earlier, there's an appetite right now to say, hey, crypto should be taken seriously. Like there's actual finance to be done with DeFi and so forth. And I think that Baxus is like a real company serving real users. So looking at the RWA narrative, or maybe just more broadly, like utility-based crypto projects, like what needs to happen to bring the level of adoption that people are looking for?
Yeah, so I'm not going to win the RWA fight. I get it. We're going to use that to refer to stocks and bonds. I'll throw in the towel. Like I'll complain about it, but I just don't think it's there's a lot of value there. I've spoken with some really smart VCs with TradFi experience who say like the whole idea of tokenizing stocks is interesting, but until you have primary issuance on chain, it's still just going to be another market to trade things with less liquidity. NASDAQ announced this morning that they're looking into going 24/5, so 24-hour day stock trading 5 days a week, like just off on the weekends. When I look at that and I get like, and the fact that stocks and these types of regulated financial assets, like there's a reason they trade on exchanges and you have to go through broker dealers. Like you know, we had the Tornado Cash incident where it turns out like people are laundering money. Like it would be stocks can't trade on totally permissionless systems. Like you don't want to find out that it turns out North Korea actually hacked a wallet and now owns X% of a company, like is now the largest shareholder and is demanding a board seat. like true hostile takeovers from North Korea.
I would find that pretty funny.
I know you would be hysterical, but like literally, can you imagine like hostile takeover as we've hacked you, we've stolen your tokens, we now are the largest shareholder of your company? Like, I see where there could be an issue and a breakdown over there. And so the stocks are going to end up being permissioned anyways. They're going to end up being, token extensions on Solana or something where like you can freeze them if they go to an unregistered thing, or that your wallet has to be KYC'd and approved to trade them. T-bills, bonds, debt, like it's interesting. I do think though that those are really important in establishing for people that there's a real use case, that there is a value to it. I think that real DeFi, I think Apollo or somebody tokenized like a credit fund. That's awesome. Those are really cool things that now gives you something to do with your money on chain. It creates for that, again, the instantaneity of the settlement, the liquidity that you want from on chain. And that will be stuff that is used more prominently. But this is, again, to me is, nobody talks about the validity of the internet. We don't like this is where like the issue is that we're still constantly fighting for we're a real industry. I've never met Mark Andreessen. I'd love to at some point if he wants. I know he said he stopped drinking, but I think I have some scotch that could convince him to maybe have a little bit more. That to me is way like, I want to know what Netscape was like when he was building it, where people are like, what are you building? I'm sure he went into VC meetings and pitch meetings and they're like, the internet is worthless and it's all a meme and it's not. But nobody talks about that anymore. So we keep fighting for validity when I'm like, don't. The validity will come when you're building a business and like people are putting money into it, and they will put money into it because their wealth management advisor is saying like, oh, here's a new financial product that actually we can sell to you. Or, hey, you're buying bottles and you don't know that it's on chain on Baxus for a lot of the users, but it is. And like, they're not worried or thinking about the infrastructure on the back end. So I think that's the biggest issue. And we keep shooting ourselves in like the foot with it, is we're to keep talking about like crying out, we're a serious industry. We're a serious industry. The only people who have to claim that they're a serious industry are people who are not really serious industries. Like nobody else is like, oh, oil is not a real, or any of these types of things. It's like, so that I think is the biggest thing, is like, if you're building a real business with value, just build your business with value. Build it on chain, because on chain provides liquidity benefits. It provides a lower cost of infrastructure. It enables you to decentralize components that used to be cost centers and to turn them into revenue drivers and into network effects. Otherwise, who cares? Like that's why I'm so excited by Inversion, like Santiago's because he's like, his thesis is super simple. Berkshire on chain. I'm buying companies and I'm going to cut their costs, but I'm not going to PE and strip them out and then sell them. I'm going to keep good businesses, reduce their cost centers, and just continuously accrue value to the underlying company. Brilliant. He's not going to be sitting there going and justifying why he's a real business. He's just going to become his tokenized shares or the LP or whatever in his company, and in Inversion Capital, will become the most valuable things on chain. Everyone's going to want them because it's real. Not him going there saying like, please you guys should all back me because I promise we're serious people.
Yeah. I think that's a good point to end on. If you want to be a serious industry, be a serious industry.
Yeah.
That's all it takes. Well, thank you so much, man, for coming on the show, and best of luck with everything you're building over at Baxus.
Thank you so much. And thank you for having me. And cheers.
Yeah, indeed. Appreciate the bourbon as well. Everyone, make sure to grab your DAS tickets. We're coming down the pipe. Like, subscribe. If you enjoyed this podcast, please share it with a friend. We'll see you all very soon.